For the sake of variety, I'm pleased to be able to say this morning that US markets did not hit all-time highs. But with the Nasdaq up 1.1% and the S&P 500 up about 0.5%, they were very close to it. The momentum, the positive upward momentum in US markets resumed in overnight trading. Interestingly, the Dow Jones Industrial Average didn't participate. It was flat on the evening, but the broader market, and in particular those glamorous tech shares, drove markets higher. We also saw a big surge again in the price of gold. It's cracked through 4,000 US dollars in the last trading session, which means it's over 6,000 Australian dollars. And there does appear to be a bit of gold fever in the markets and in the streets right now. And it's easy for that big move up in the gold price to obscure the fact that silver's also near its all-time high at 49.9 US dollars an ounce. So plenty of action in precious metals at the moment. Of course, that's flowing through to those stocks as well. Nvidia again started overnight up 2.2%, very close to its all-time high. AMD, in an ongoing halo effect from the announcement of a number of deals over the last couple of weeks, was up 11.4% on no news last night. And I think that gives some indication of what's driving the market at the moment. It's still about AI and by extension, semiconductors, data centers and nuclear power providers. So AMD up 11.4% on no news shows us where we are in the investment cycle at the moment. We did also see FOMC minutes. Market largely has ignored a lot of Fed statements. If we go carefully through those Fed statements, they are very balanced, talking about the conflicting nature of the Fed's dual mandate. That is, that need to maintain employment at as high as it possibly can be versus containing inflation and price increases in the economy. At the moment, the Fed's minutes are very clear that this is a delicate balancing act, and yet the market appears to be shrugging all that off in a mania for interest rate cuts. So when the markets will start listening to the Fed is hard to say, but it's clear once again from the FOMC minutes that were released that the market is not hearing, or at least in my opinion, is not hearing what the Fed is saying. And perhaps one of the most disturbing moves or interesting moves that is also under the radar over the last three sessions is that big increase in the US dollar. Now, some of this has to do with the other side of the equation. For example, in Japan, the Bank of Japan declined to tighten rates despite widespread expectations that it would. And in Europe, there are big concerns about the second largest economy on the continent, the French economy, as its political cycle appears to have turned, at least temporarily, dysfunctional. And that meant both the euro and the Japanese yen were slammed over the last few sessions. They're down hard. The dollar now regaining all of that ground that it lost in the big sell down after the introduction of tariffs. So that more than 8% sell down has now been fully reversed and the US dollar has moved higher. Now that's quite possibly a sign of investment flows into the US. And it's no coincidence that the dollar surge continues and the upward momentum in US markets is resuming. And the clear implication is that international investors are rethinking their approach to the globe, and they're favouring the better growth prospects of the US economy. And that's bringing all the investment flows in, something that's important to watch. And it's very important for international investors, Australians as an example, because when share markets rise and the currency you've invested in rises, you get a double banger effect. That is, gains on both the currency and on the shares themselves. So a very important development, that big lift in the US dollar, certainly helping a lot of Australian investors' portfolios this week. A couple of stocks on our watch list today. The VanEck Gold Miners ETF. Well, we'd have to talk about gold. It was up 2.8% yesterday and is up 55% over the last 3 months. It's on track for its 10th weekly gain, up 130% year to date. These are huge numbers, and particularly in what we generally see as a stable and safety investment. It's fascinating to see gold at these levels and winging around with such volatility. And I think it's arguable that it's not defensive with this sort of volatility and high price, but nonetheless, it appears that gold has captured the public imagination. Gold's outpacing all US equity indices. And I can't buy it myself, but people are telling me 5,000 is the next goal. 5,000 US dollars an ounce for gold. That looks like a stretch to me, but that's the talk in the market. And one of the reasons why the Van Eck Gold Miners ETF is performing so strongly at the moment. Also on our watch list, Guzman & Gomez, it reported a 19% rise in first quarter sales. Now, this stock has been hit hard. It's down 33% year to date, and analysts are not jumping up to put their hand up for this stock. It's got mainly hold ratings, and certainly on the Moomoo platform, it's rated a hold. And yet they were talking a good story yesterday. Guzman & Gomez have announced $100 million buyback. They've affirmed their forward guidance for sales after the shock of July. And there is an argument that their share price could be rebasing around current levels. And especially if they can get further momentum in sales in their international operations, we could see further gains for Guzman & Gomez shares. And the last stock on our watch list today, James Hardie. Now, the shares jumped 10% yesterday, and a number of traders were getting excited about the potential fall moves, given how far this share price has fallen. James Hardie's been absolutely trounced over the course of this year for two good reasons. One, it made a company transforming deal and worked a mechanism to avoid getting a shareholder vote on that deal. And secondly, it revised its earning downward at the last quarterly earnings report by 20% without any warnings to the market. Now, that kind of thing does not please shareholders, and there's a lot of anger around that, a lot of speculation about what might happen at the annual general meeting of James Hardie in November and whether or not all the board positions are currently safe, given the palpable anger about James Hardie's efforts. It's a tough one to finish on. There might be a value argument at the moment, but with so many of the shareholders, and it's estimated Australians hold 60 to 70% of James Hardie still, despite the move to the US listing, that sort of anger could mean that a share price is less likely to recover as shareholders move to take advantage of any gains in a stock in which they've clearly expressed very strong disappointment.